Several major automakers are making big bets on the electric vehicle market. But so far, the US EV market seems to belong to one automaker, Tesla.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, we're watching a February 2020 pseudo-documentary from CNBC regarding the electric vehicle competition that is supposedly, perhaps, maybe, possibly, potentially considering coming for Tesla. This video was originally published just prior to the world collectively losing its mind, panicking, freaking out, stock markets collapsing, billions of dollars of value evaporating overnight, people crying in the corner and asking for their daddy to please hold them because they're scared. In other words, a lot has happened since. So as we go through this, I'll provide updates where it's relevant, scheduled releases, delayed, changes in the marketplace, etc. At the end of the day, we're really just trying to see, has anything meaningful happened between February and today? Is anyone closer to catching Tesla, or has Tesla's lead accelerated further? Hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
Of the 246,000 new electric vehicles sold in the United States in 2019, nearly 194,000 were Teslas of one kind or another. That is more than 3 times the amount sold by all other manufacturers combined. The Tesla Model 3 sold nearly 160,000 units alone. No other vehicle from any other manufacturer came close. The next biggest seller was the Chevrolet Bolt, which sold roughly 16,400 units, a fraction of the Model 3's volume.
So in 2019, Tesla was dominating the US electric vehicle market. In the first half of 2020, we learned that Tesla accounted for 81.66% of all new electric vehicles sold in the United States. In other words, Tesla continues to absolutely dominate. This is a Google-esque lead, an Amazon-esque lead. This kind of market share, very rarely seen, except in the case where somebody offers a product or service that is light years ahead of everything else available, which is exactly what we're seeing. I mean, when was the last time you used Bing? Exactly. When was the last time anybody bought an EV in the US that wasn't Tesla? Exactly.
Investing in Tesla is said to not be for the faint of heart. But as the automaker has managed to get a handle on production of its Model 3, introduce other models, and expand its presence in China, its stock has climbed, hitting new highs above $900 in February 2020.
And of course, these record highs of almost $1,000 were pre-stock split. So now, split adjusted, that was under $200. Shout out to everybody who didn't sell the stock after it ran a lot because they understood the business and had a long-term vision rather than a short-term fear of, oh my god, it's gone up so much, I'm scared, daddy.
For years, skeptics have warned of a tsunami of competitors coming for the pioneering electric car brand.
And for equally as many years, they have been dead fucking wrong.
And starting in just a few months and really accelerating next year and into 2018, it's just going to be swarmed with long-range electric car competition.
But it's still Tesla.
4 years later, with Tesla dominating the US EV market with over 80% of new vehicle sales, the only thing swarming is Mark's investors trying to get the last of their money out of his ridiculous investment fund before it evaporates to zero.
A few vehicles have been released so far, but sales indicate that any one of them has failed to make a significant dent in Tesla's share of the EV market. So far, the Tesla killers haven't really killed Tesla at all. But more rivals are coming, and they are being launched by massive automakers who have been making cars for a long time. So, who are they, and how much of a chance do they have?
You know, this is a really good question. How much of a chance do they have? Bear with me, I'm going to do some complicated arithmetic just to try and determine how much of a chance have they got. Let's see here. 420.69 minus 420.69 equals 0. They have 0 chance. But in all seriousness, they really do have no chance. Now, why would that be? In short, Tesla's lead is unassailable and it is accelerating. How do you possibly catch up to a company that's light years ahead of you and whose lead is accelerated? Every step forward you take, they take 2 steps forward. It's game over. Some people can see this clearly, the writing's on the wall. Others are still living in a deluded fantasy, conjuring up the most incredibly unlikely scenarios as if they're logical outcomes. Such as a company who has decades of experience manufacturing internal combustion engines can suddenly pivot and become an expert at building electric vehicles whose core technology isn't an internal combustion engine, but batteries and software, okay? Major change, major leap. We just heard recently that General Motors is hiring 3,000 new software engineers. Now, this is a little bit of a microcosm of what's going on. If the competition was coming, why is it only now that GM is hiring literally thousands of software engineers? Because they need them. They weren't competent. They need new skills and new abilities. So while Tesla's running away with this lead, improving in leaps and bounds, driving their costs down, increasing their volumes, adding new features and functionality, squeezing more range out, improving their technology, getting better and better and better and further ahead, everybody else is scrambling, just trying to become competent. Not good, not decent, not even close to being able to catch up, just competent. In other words, the so-called competition at this point in time are so far behind they can't compete. They don't know how to. They're hiring the talent that they believe they need to eventually start competing with Tesla, and until then, they are literally doing nothing. Tesla is really running away with this, and the people who can't see this, I mean, I hate to say it, but something's not right. Just there's a malfunction upstairs. What else can I say?
First, it helps to look at what they're up against. Analysts and industry watchers debate the reasons why Tesla is so dominant in EVs. There are a few clear ones on paper. First of all, Teslas have some of the best ranges available of all electric cars on the market.
This slide can tell us a lot. Now clearly, Tesla was dominating back in February 2020. But what's happened since is these numbers have become irrelevant. Tesla has squeezed additional range out of its entire line of products. In fact, the Model S now goes over 400 miles on a single charge. Tesla Model X is over 370 miles, and the Model 3 is over 350 miles. In other words, as I was just saying, Tesla's lead continues to accelerate quite dramatically. They're already leading, and they've extended that lead further in less than a year. And I almost forgot. In addition to increasing the range, the features, and the functionality of their entire product line, they've also continued to reduce the prices. How do you catch up? That's right, you don't.
And Tesla's biggest seller, the Model 3, starts at about $39,000, not far from the average price of a new vehicle in the US. Teslas have also garnered praise for their innovative design both on the outside and the inside. But there are criticisms of Tesla as well. As a relatively small and young automaker, Tesla has been plagued by manufacturing difficulties, which has left hopeful buyers waiting a long time for reserved vehicles. Veteran competitors have even used their manufacturing experience as a selling point when marketing their own electric models, telling customers they won't have to wait for a newly unveiled vehicle. Tesla customers have also complained about troubles obtaining parts and service. Tesla's success seems to defy the odds in other ways. Out of the 3 models it currently sells, 2 are traditional sedans, in a market that has been increasingly favoring sport utility vehicles since the US economy emerged from the Great Recession. Its only SUV available so far, the Model X, carries a very high-end price tag.
Now in fairness, this video did come out around 1 month before Tesla began delivering Model Ys in the US. Very strange, however, that they didn't even mention this vehicle because yes, it's a huge segment and that's exactly why Tesla's targeting it. We all know Tesla's Model Y is an absolute money printer. Their manufacturing techniques have improved so much the costs have plummeted. It is sold for more than a Model 3, yet it is made for far less, which means the profit margins are gigantic and it is selling like you would not believe.
But Tesla fans, loyalists, and would-be buyers are so far undeterred. The company seems to attract a lot of hype and attention. Many industry watchers say that much of what sells Tesla cars is Tesla itself, as well as its charismatic, if often controversial, leader Elon Musk. Despite gripes about long waits for service, serial production setbacks, and criticisms of the company's build quality, buyers still seem to want to be part of the Tesla vision. The renowned industry reviewer Consumer Reports has both praised and criticized Tesla vehicles. But it says the brand seems to have something special no one else has been able to capture.
Well, I think that's exactly it. I mean, I think there's a lot of interest in Tesla, more so than the fact that they're looking for an electric car. So the fact that Tesla is this innovator, is the latest thing, is the latest technology, that is what is so attractive to so many people.
So the question is, which brands can compete with Tesla? Which ones are meant to? What are potential Tesla buyers shopping? On the higher end, where Tesla tends to play, there are cars such as the Audi e-tron, the Jaguar I-Pace, and the BMW i3.
9 months later, and we can confirm approximately nobody is buying these electric vehicles. I mean, the e-tron, hope you're not French, the Jaguar I-Pace, the i3, I mean, these are steaming piles. We all know it. The truth is, they suck shit. Now, look, if Tesla wasn't making vehicles, sure, they would be okay. But Tesla is making EVs. They're making vehicles. That's what you're competing with, okay? Anything that isn't up to the scratch is automatically a piece of shit because Teslas are that much better.
Porsche began delivering its long-awaited Taycan to U.S. customers in December. It's expected to follow that up with at least one other model, an electric version of its Macan crossover. Mainstream electric vehicles include the Chevrolet Bolt, the Honda Clarity Electric, a couple cars from Hyundai, the Kia Niro, the long-selling Nissan Leaf and Leaf Plus, and the Volkswagen e-Golf. There are several others scheduled for release starting in 2020 from major brands, especially in the premium segments and near the higher end of the mainstream market where Tesla currently competes. Ford unveiled its Mustang Mach-E in November 2019. The company expects to begin deliveries in late 2020 and said it has already reached its order limit for a first edition version of the vehicle. Despite what some have called a muted response to its e-tron, Audi is planning more e-tron variants, including a mid-size SUV called the Q4 e-tron, a high-performance GT, and a sportback version. BMW is expected to launch the i4, a more sport-focused car for its electric i brand, whereas the i3 was more of a small city car that even elicited some derision from BMW purists. The i4 comes with 523 horsepower. BMW's Mini Cooper brand will supply the city car, the Mini Cooper SE, expected in early 2020. Mercedes-Benz parent Daimler said in December it would delay the U.S. launch of its EQC electric crossover until 2021, about a year after its originally intended launch time in early 2020. A more sedan-like car called the EQS is also expected. Smaller luxury brands are pushing into electric vehicles in the near future as well. Jaguar is planning an electric version of its XJ sedan, and Volvo is working on an electric XC40 compact SUV, as well as a high-performance crossover through its sister brand, Polestar.
Speaking of the Polestar, which, come to think of it, sounds like the occupation description of some of the women I used to date in my 20s. Anyway, recalled for the second time. Yes, 2 recalls in a year. Not a good look. Now, I'm not here to disparage Volvo Geely and this spin out. Look, okay, mistakes happen, troubles happen, problems happen, but this is the point. It's not easy to build an electric vehicle, as all of these automotive manufacturers are starting to discover.
Colossus Volkswagen is throwing its weight behind electric vehicles. Apart from its higher-end products under Porsche, Audi, and other brands, the German giant is planning several Volkswagen-branded EVs, including a crossover called the ID Cross and a revival of the legendary VW bus called the ID Buzz. Then there are the smaller brands and startups such as Bollinger, Lordstown, Lucid, and the troubled Faraday Future. Many such vehicles are planned, including several in a very American segment electric vehicle manufacturers so far have barely touched: pickup trucks. Tesla introduced perhaps its most ambitious and polarizing design yet in 2019, the Cybertruck. This puts the company, at least technically, squarely in competition with pickup segment heavyweights such as Ford, Fiat Chrysler, and General Motors. Truck sales in the US are dominated by Detroit. Ford has said it plans to release a fully electric version of its best-selling F-Series full-size pickup. General Motors plans to revive its once potent Hummer brand name as an all-electric vehicle. GM said at the end of January 2020 it will spend $2.2 billion at its Detroit Hamtramck assembly plant to produce several all-electric trucks and SUVs.
To build a new generation of electric pickup trucks, SUVs, and other EVs beginning late just this next year.
Buzzed about startup Rivian is working on its own electric pickup truck. The R1T is slated for release along with a similar-sized sport utility vehicle in 2020. Rivian is promising 400 miles of range on a single charge, a weighting depth of more than 3 feet, and 0 to 60 acceleration in 3 seconds.
For what it's worth, I actually believe that Rivian has a very good shot at not going bankrupt. Can't say the same thing for most other companies out there trying to build electric vehicles, whether legacy automakers or new startups. Now, that's not to say that these companies can't be successful. All I'm saying is that the odds are heavily stacked against them.
Ford invested $500 million in the startup in 2019 and plans to release an SUV bearing its luxury Lincoln badge that is based on technology developed by Rivian. Meanwhile, Tesla's Cybertruck design seems to baffle some industry watchers. Some investors have called it weird, really weird. Musk defended the truck's polarizing design on a conference call after the automaker released earnings for the fourth quarter of 2019.
For the Cybertruck, a few months ago we revealed the Cybertruck, and that went viral. And we tried to build a product that is superior in every way without any preconceptions of how such a product should look. So it was really just from the standpoint of what's the most badass, futuristic armored personnel carrier that kicks the ass of any pickup truck. Basically, that was the goal. We wanted it to look like something that just kind of came out of a sci-fi movie set from the future.
On the same call, Musk said Tesla's demand exceeds what the company can produce over 3 or 4 years.
I've never seen actually such a level of demand at this. We've never seen anything like it, basically. I think we will make about as many as we can sell for many years. So we'll sell as many as we can make. It's going to be pretty nuts. And I think actually that the product is better than people realize even. They don't even have enough information to realize just the awesomeness of it. It's just great.
Industry watchers say that the move into trucks is another way for automakers to try to make the best of a difficult situation. Both investor excitement over Tesla and increasing regulatory pressure are forcing legacy automakers to come up with some kind of electric vehicle plan. But it is commonly thought that electric vehicles are, so far, still a tough sell for many buyers. EVs remain a tiny slice of the U.S. auto market and are heavily concentrated in states such as California, where high fuel prices, government policies and incentives, and perhaps a dash of culture all contribute to higher electric vehicle sales.
EV demand in the U.S. market has been pretty modest through the years.
Consider that it took an entire human generation for 44 alternative energy models combined to achieve 1/2 of the market share of the Ford F-Series pickup, the best-selling pickup in the United States. Around the world, it seems the healthiest electric vehicle markets are supported heavily by government intervention. The largest car market in the world, China, is also the largest market for electric vehicles. Tesla surprised the automotive world by being the first foreign car company to gain permission to manufacture in the country without partnering with a Chinese firm.
Tesla's China Gigafactory was a huge deal, and many people somehow seem to overlook the information that Tesla told us about this facility. Long term, it's going to produce over 1 million vehicles per year. In fact, in 2021 alone, the factory is going to ramp to around 500,000 units, as much as Tesla's entire global production in 2020.
Electric vehicle sales were growing in China until the government cut subsidies for battery electric vehicles in June of 2019. Sales began falling that next July, just weeks later. While early electric and hybrid vehicles were sedans and compact cars, newer models are increasingly sport utility vehicles and pickups, areas of the auto market that have grown tremendously in demand over the last decade. They are also vehicles customers are willing to pay more for compared with similarly sized passenger cars. That combination suggests automakers will have an easier time moving them off the lot and absorbing the high costs of electric vehicle technology. But they will still have to find a way to challenge the awesome brand power and cult-like following Tesla has achieved.
So almost 1 year after this video was published, let's recap what's happened. Tesla has decreased the price of all of its vehicles, increased the range of all of its vehicles, added new features and functionality that weren't available when this was published to people who've already purchased their vehicles with over-the-air updates, meaning their car got better after purchasing, released full self-driving beta, which means we're one step closer to autonomous Tesla robo-taxis, become eligible for and is now announced to be included in the S&P 500 index after 5 consecutive quarterly profits, maintain guidance to deliver over 500,000 vehicles despite a surprise pandemic, continued to construct new facilities at astonishing rates in both Berlin and Texas, while also expanding production in Shanghai. Tesla's stock has gone to the moon, in fact to Mars, and the competition has done nothing meaningful to catch Tesla. In fact, they're slowing down. Tesla's getting further and further ahead, and the competition is recalling, delaying, and slowing their plans. What else can I say? Tesla has won the decade. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.